there, traders and friends, market participants and enthusiasts right around the world. I hope you are doing well. This is a Tuesday afternoon market recap. Today's date is the 13th of March 2018. A very interesting session worth of trade we've just witnessed. A very important, potentially hazardous type of reversal. What we have seen take place, first of all, on the Nasdaq is the establishment of this outside day reversal candlestick pattern. This is what we call an engulfing pattern, and essentially what it means is that the breakout is potentially reversing. The reason for this, and what I spoke about over the weekend, is that we still have this open gap which established itself between the close on Thursday last week and really the gap and go which continued into Friday to end last week's session worth of trade. We still have the open window as it stands, but pay attention to the figure 7,425 on the Nasdaq. This is my area of support for the Nasdaq to retrace back on into and hopefully pick up one of the three rising exponential moving averages. You can see for yourself on my screen that the rising 10 exponential moving average is coming in very close to the figure that I just previously aforementioned, 7,427. So as long as this green box holds, it can of course overshoot this a little bit lower, and I am going to speak more about this in due course, because again, we're seeing continued sort of worrying signs on the industrial average and the SP500, which does indicate that there is still selling on the card. So let's move on over into the Dow Jones Industrial Average, and what we saw today was another 171 point sell-off. If I quickly change over to the weekly chart, this really best illustrates what's going on, or at least describes the undertone of the market itself. What we're essentially doing after the sell-off, which really sort of finished at the beginning of February, is that we've moved into a sideways moving market. And with these sideways moving markets, generally after sell-offs, is that volatility tends to spike. And what happens is that the actual environment that we were in or had previously been in, that being of course that very strong low volatility bullish uptrend, which is really conducive of course for swing trades, tends to suck a lot of traders in. And what happens is they produce a series of losing trades. The reason why is because with that, of course, increased volatility comes these really sudden shifts in momentum. As you can see on my screen, you can see this candlestick right here. This is generally what we consider to be a long day Morobozu candlestick, a very quick and abrupt rally to the upside. We sort of stabilized the following week, but the week following we sold off very aggressively. And then again, 2 weeks ago, we rallied very aggressively. And now for the first two sessions of this current week, we find the industrial average down 328 points. The larger picture, however, is showing us that the market is stuck. It's moving sideways. And above all else, at this particular moment and for the past number of weeks, what I've been speaking about is for the market again to more or less get stuck moving sideways. We have been a little bit unclear as to market direction, either coming down to this support, and this would be again the best place to actually place long orientated trades from, or to see these markets miraculously push above these levels, which again are still not holding, and come on up and close these open gaps. Now obviously there is a large divergence between the industrial average. This is the industrial average on my screen. You can see that we're printing just above 25,000. We just managed to hold that psychological round number today, and consider of course where we closed and where the all-time high is on the Dow Jones Industrial Average going back to late January. If you compare this to the Nasdaq, you can see that the Nasdaq, as at yesterday, even during the early stages of trade today, pushed on up to new all-time highs. So you can see clearly that there is a divergence between not only the Nasdaq and the Dow Jones Industrial Average, as you can see on my screen, but also the S&P 500. Now, the S&P 500 is holding up a little bit better than the Dow Jones Industrial Average, but it is still quite a distance away from its relative all-time high. Again, going back to the late sessions in the month of January, we still have this open gap, and as long as this gap is open on the S&P and on the Dow Jones Industrial Average, it is still going to continue to act as a magnet. I'm not saying that the S&P and the Dow are going to close it this week. It looks as if it's not. Of course, they look as if they're continuing to roll, and it looks as though we're going to continue to be range bound. But eventually, even if we come on back down to the support area, there is a very good chance once again that we're going to have to come on up and close this gap eventually. And this is really what we've been patient about and just waiting for until we get some very clear signals. Now, again, going back into the industrial average, speaking about volatility and speaking about whipsaws and how it really isn't all that conducive for swing trades during these, crazy periods in the stock market, the best way to sort of surmise this for you is if I actually bring up the Bollinger Bands. Now, again, publicly and also privately in pro, I've been speaking about the Bollinger Bands, and they are really effective in actually understanding, the sentiment and also the psychology of traders actively transacting in the market. What you want to do is pay attention to this top Bollinger Band here and also the bottom Bollinger Band. What we have been speaking about is that of a Bollinger Band squeeze setting up. Now, again, this isn't setting up on the Nasdaq. You can see the top band is turning up, and also the top band itself is still angled relatively in sort of a healthy manner. But the industrial average is showing us that it is entering into that of a squeeze. So if we continue to see the industrial average sell off or even move sideways, but, and this is the big but, not push outside this top band, which is being printed, or at least the print of that top band is at 25,583 points. So again, it's about 580 points away from where we closed today. What you are going to continue to see are these two Bollinger Bands squeeze. And with this is when we can definitively sit here and set up a really nice bidirectional trade bracket. It is not ready yet. So again, if you find yourself a little bit frustrated by a little bit of, lack of activity, so to speak, don't sort of beat yourself up over it. It is really quite an intelligent thing to be sitting on the sidelines, or at least not really being all that active in the market, because it is wildly erratic. It's a little undisciplined, although we can expect these sort of environments to play out into the future. We are moving towards the end of this natural sort of cycle of flushing out, of course, the buyers and sellers after this very abrupt sell-off, okay? Again, which took us into the early period of February. Now, if I continue this discussion, also what I would like to speak about, given, of course, the theme of the Bollinger Bands, is that of gold and silver, because gold and silver are still moving sideways. We haven't seen any clear directional movement yet, but it's not really best surmised with gold. What you can clearly see is that we're still holding this support. I still think that gold's going to come on down to maybe 123, 122, but we still have insurance policies for the bullish breaks. Of course, this is going into our outlook for the US dollar moving forward. But if I bring up the chart of silver, you can see for yourself that we are moving very close to a Bollinger Band squeeze on the silver ETF. So pay attention to this. This has the potential to be quite volatile. However, this is largely going to be, or at least the momentum breakout is going to be largely dictated by that of the price of the US dollar. So if we move into the price of the US dollar, you can see that it is still under a little bit of weight. It is still continuing to sell off, but at the same time, it isn't really coming back down to retest any of these support levels, nor is it actually breaking any of these support levels either. So it is still largely treading water sideways, and there is just at this particular point no clear directional move with the US dollar. There is a general sort of indecision on the currency itself, and of course that is flowing into the non-directional state of both gold and silver. But we're still assuming that the larger macro trends are eventually going to take hold and push these in the directions that I've very frequently quoted in pro, and also here on this public YouTube video as well, on my channel here. Moving on into a couple of individual trades, a very interesting piece of analysis today on Amazon. We had the breakout at 1,546. This is the clear reversal signal, so to speak. This is that outside day candlestick that is just set up on the Nasdaq as well. So if you wanted to take some profits, it's a good idea to do so. You're more or less going to get out at the close of last Friday if the market reverses. Otherwise, you can let this stock continue to run, or you can take a position or portion of your position off the table at 1,576. The other stock in tech that has given us a similar signal is that of Netflix. This actually produced itself yesterday. This is what we call a tweezer top reversal pattern. And today, during Tuesday's session, we saw the continued sell-off down another $5.42. So you're getting a few warning signals, in combination or in synchronicity with that of the Nasdaq. Again, we spoke about this over the weekend, but at the same time, what isn't happening is that we're not actually seeing the Dow and the S&P rally on up and close these open windows. So, mixed signals, mixed markets, and I think this is all leading us into that of a Bollinger Band squeeze. Now, with Apple, this is the first dark candlestick. We do have that legitimate upper wick today, so you can essentially move this candlestick up above the high of Tuesday's session. This is a legitimate breakout trigger now that we have this candlestick. We're ready to move on Apple once we get above 183.89. So that trade is good to go. Boeing Airlines, this almost got stopped out yesterday. I mean, if I just zoom in enough for you to see this, 355.40 was the stop on this trade. We had the original short at 347.44. Again, a bracket trade. Bearish below this point, bullish above 372.32. You can see the high of this candlestick. Pay attention to this figure just here. It was only a couple of pennies, really. The stop was 355.40. The high of the day's candlestick was 355.23. So you can see another dark candlestick. This looks somewhat like a bear flag, which is breaking to the downside. Down another $5.52. So it looks as though potentially we might be rolling down to 322.64, which was the first target. So what we'll do with this trade is we'll manage it in due course. At the moment, keep your stop where it is. It's too tight to be bringing it down to the high of Tuesday's intraday wick at the moment. So it's starting, of course, to continue in our aforementioned, or at least in our believed direction below that trigger. Baidu is starting to set off a bunch of reversals. You can see the general pattern taking place between a bunch of these stocks. Caterpillar, a couple of reversal signals, again above 150.42 was the bullish trade. But again, during these sideways corrective movements, think about the industrial average, think about the S&P and what I've just spoken about. You can expect this general sort of noise in the market itself, this really choppy sort of price behavior and action to linger around, and you should be comfortable knowing that you're going to, of course, come into the sessions holding these swing trades with a generally unpredictable market, but understanding, of course, as long as we hold above structural support areas, well then once these markets turn for, a more legitimate turn, a sustainable turn, well then we're going to come on up and close those open windows on the Dow and S&P, which is going to produce, again, a lot of these individual stocks encompassed within those indices themselves to continue on their bullish ways as well. So this is just looking like that of an intermediate correction. And within the intermediate correction, we're just simply moving into the minor levels of the wave. Continuing into COP. COP, again, one of those other stocks largely moving sideways, establishing that support area. No cause for concern at the moment. Again, think longer term on these trades. CVX broke out above 113.54. It had already previously broken out above 116.15. We're pretty much closing at that 116.46. So again, continue to expect this to move sideways. Google yesterday hit our target at 1,167. A very fast trade from 1,089. That trade is effectively done. Down $26 today, but we hit our target again on Monday. So that was your exit signal. That is the closure of the gap. There is no trade on Google at the moment. That trade has run its course. Now again, moving into Goldman Sachs, we have that first reversal candlestick and outside day. This is happening on generally low volume, which is interesting. So what I can do right now is change this dashed line into a default solid line. Let me just move this down and I can bring this trigger up a little bit for you, up to about 278.98, pretty much 278. I want to allow a little bit of fluff for noise, so to speak. But again, we're getting very close to either seeing a significant breakdown or a significant breakout, largely dependent on which direction these markets move. But Goldman Sachs is holding up relatively well in the face of a relatively weak market. We are back up at those all-time highs on that individual stock. IBM has been floating around 160.30, should be triggered into this, or at least I am. And again, this is something that I'm looking to hold maybe for a month, maybe 2 months. But as long as we hold above macro support, again, you just have to expect this long macro trend to continue. All right, so just moving forward, not a whole lot to update you on IBM. We do have a little bit of a sort of a pseudo shooting star, but at the same time, no major reversal signal. I've spoken about Netflix. Netflix I recapped just after Amazon a little bit earlier on. At the same time, Tesla went bonza. Yesterday, it had a really, really strong day yesterday, but today, again, a hammer candlestick. This is largely volatile, largely stuck moving sideways. And at this particular moment, I'd encourage you to stay clear of Tesla unless it starts breaking above 362 or starts breaking down below 317. We've got some pretty decent, sort of breakout or breakdown targets on this. At the moment, though, it's something that you just want to avoid. It's not really a great trade at this particular moment. So On that note, everyone, enjoy your Tuesday evening. And I'll be back with you later in the week for some more market updates. All the best. It's James signing off on behalf of Pivot Point Trading. Farewell.